Well, good afternoon, everybody. Oops, I forgot to put the date in there. Well, anyway, today's May the 6th, and I am Steve Drummer. Shrink me down a little bit here. The Big Dividend Hunter. At least that's my marketing idea. Let me get rid of that. There we go. Now we got a nice screen. Going to do the review for May, show you what I've been up to, hopefully give you some good ideas. We're going to talk a little bit today about the bear market. Two stocks, one's RA, which is Brookfield something or another, and ZIM is a transportation company out of Israel. You probably have heard a lot about them. I'll give you a little bit of my take on them and show you what I've been doing. And let's here I am, yay! A nice headshot of me and wearing my brand. This hat's rather special to me. Let me expand me up a little bit over here. There we go, so I look not so obscured. And you gotta have a brand, they say. Well, I'm looking for gems and diamonds and rubies and emeralds of dividend companies. And here I am. There's multi-point view of me. This was a fun slide to make. Whee! From different angles. Wearing my vest, my lion's tie. There's my little gold chain. You may not be able to see it in the photos here, holding the tie down. My khaki pants and my shoes and my hat. Everybody's got to have a brand, they tell me. So let's see what happens. Oh yeah, I've got 2 followers after 2 months worth of work, and thank you. Everyone else says it, I'll say it. Click and subscribe, like it. As I get going here, I'm going to do videos more regularly. But there's a lot of good stuff on YouTube from other folks, so I'm sort of the final step. I look at a lot of these videos and decide, what they're saying. Here's my humble little abode. It's a nice little Cape Cod you can see. That's obviously the front of the house from the street. And there's my garage. I gotta paint this garage door this spring. Put the paint on about 10 years ago. Did the entire garage all in one day, and it's been chipping off here, down mostly at the bottom, a little bit here, and so it's finally getting warm here in Cleveland, Ohio. I'll take some of these chips down to the local paint shop and get a paint match. And in case you don't know it, I'm a freight expediter. I drive during the week. As much as somebody sits at a desk, I'm out there rolling in a vehicle. This is what my truck looks like. The exact same color, wheels. I got 6 lugs down here. And it's a 2009 G1500 Express cargo van. That's a mouthful. But that's what it looks like. I spend 40 hours a week driving. And I'm getting close to retirement here and looking to maybe drop down to part-time. But as of May the 6th, which was Saturday, I had 391,000 miles on it. And that's not my best. I had a Chevy Astro, it was a 2000, that I drove to 697,000 miles before I was convinced that it had a useful life. Donated it to a church. They used it for another 3 or 4 years. And then it was really out of life. So that's what I do. I'm a freight expediter. I pick up freight from point A, take it to point B, normally in about a 2 to 4 hour window. When a company needs something in a hurry, they call my carrier. I'm not sure if I'm allowed to plug my carrier, even though it's my show. But if you live in Cleveland, here comes the plug. Call Reliable Runners up in Mentor, Ohio. And talk to one of their salesmen. Maybe what the services that they offer is something of great value to you, and we could do business. There's my plug. Let's move on. Okay, this is my company, and this is my Root LLC. I'm in Ohio. My marketing branch is My Select Stuff. Big Dividend Hunter is my investing branch, and on Facebook and YouTube you can find me under the Big Dividend Hunter. I only got a couple of videos up right now. This will be my third one. Oh, and this is a picture of a valley in India somewhere. It's public domain, and this sort of represents the market that we're in. It's a jungle out there, folks, and I just like the picture. It really shows what we deal with, and we're trying to, I don't know, get to the end of the valley, find gems along the way, whatever. It's just a pretty picture, and I like it as my my company logo. So this is my disclaimer. Let me scoot this out of the way. I'm not a professional in any capacity with any entity connected to any stock market. I provide information. You do your own study and research, make your own decisions. I'm never going to recommend that, oh, you got to do this. No. I'll show you what I've seen and what I've gathered together, and you decide if it has any value to you. And we have statements and statistics in here that came from other sources believed to be reliable. But unfortunately, they're not guaranteed as to their accuracy and completeness. They look legit. Check it out. It could be either I'm right or I'm wrong or somewhere in between. And if I make any references to any securities, it doesn't constitute an offer or a recommendation to buy or sell these securities. And everybody's favorite one. The past performance of a particular security or investment strategy does not in any way guarantee its future performance. Yeah. And maybe you should consult with a financial advisor before making investment decisions. And that's what I do. Try to make intelligent decisions. And here's what I do. I got no courses to offer, like a lot of places. I don't have a book for sale. I don't got no wild story. I do dividend investing, mostly looking for monthly and quarterly returns. I build a useful chart right now. It is for sale. No subscriptions or membership fees. Buy it if you want it. Ignore it if you don't. Try to pass on useful information to make everybody a better investor. And once again, I'm on Facebook and on YouTube, and you can look at my personal profile under my name. No secret, you find out who I am. And what are we looking for? 3 big things every guru out there talks about. We're looking for value, we're looking for growth, and lastly, we're looking for income, aka dividends. Because if I'm giving my money to a company, it's a loan. I expect some payments back. A lot of gurus talk about it. They buy nothing but stocks that have dividends. And yeah, why let somebody use your money for nothing? So my goal is to enlighten, to encourage, share my experiences, and hopefully I'm entertaining. Wrapped around everything else. So let's see. My investing style is very basic. It's dollar cost averaging. I make regular purchases at regular times. I try to buy on the dip. In the bull market, when there's a 5% more drawback on something, I'll pick up some shares. Bargain basement buying, boy, that's what I've been doing during this bear market, and it's been paying off. Looking for value, growth, dividends when we're in a major downturn like we are now. And I do windfall purchases when I get a tax refund. I do bonus work for somebody, and enough capital from my side hustles, gift money, etc. And let that let that pile up till there's like a significant pile, $1,000 or so I can make a significant purchase. Nothing outlandish, just looking for good, solid what I call aggressive conservative growth. And we'll get to that a little bit from now. Hey, my mantra, I've only got 2 points right now. Quality comes at a minimum price. Don't overpay for it, though. Finding a good piece of quality, you're not going to get it for cheap. Cheap always costs more. And live like no one else so you can live like no one else tomorrow. Live today and tomorrow. That's Dave Ramsey's catchphrase, and I like it, and I'm using it as my own. I'm borrowing it from him. Okay, simple dividends. If you're new to this, this is the mechanics of it. There's 5 parts to a dividend. One being the declare date of when they're declaring that they're going to pay a dividend, and they declare the amount that's going to be paid. And when you're looking at any dividend, this is a big one, because you got to make sure that they're talking about that dividend in U.S. dollars. And sometimes you'll see different letters. It'll normally say USD after the number. If it says anything else, it's a foreign currency. Then you want the expire date, and that date's very important. That you have to own the stock free and clear by end of business on that date. You can't buy it at 8 o'clock in the morning on most of these trading platforms and have ownership of it by 5 o'clock that day, because they have to do all the accounting and make sure you can actually pay for it. And I trade on TD Ameritrade, and it normally takes 3 business days for everything to smooth out. So if you're going to buy near the expire date, I recommend 5 business days minimum before the expire date. And then the record date. And that's just the date when the company looks at all the people that are holding their stock, and they say, okay, who owns our stock today? And that determines who's going to get paid. Because if you're just a Johnny come lately and you didn't get in under the wire, you're not going to get that dividend that they're going to be paying out. And then the one we all love is the pay date. Now, that's the fun one, because they can declare a date, but the actual time that it may show up in your account may be as long as 7 to 9 calendar days after the pay date. Now, some of the stuff that I have, they literally pay right on the date, 90% of the time. And most of them pay either on the pay date or the day after. I've got a couple that I got to wait 5 business days, because it's the way the monies have to transfer and everything else. But it's worth it. Just plan accordingly. That just because they say it's going to pay on a certain date doesn't mean the funds are going to be in there on that date. But you will get your money. That has never failed. You will get your money. So that's some basics. These are my favorite websites. NASDAQ, dividend investing, dividend.com, stock analysis. Those are the ones I go to when I'm looking for the numbers, the balance sheets, the financials, all that good stuff, when I want to do a deep dive and get a better idea of, do I want to do business? Do I want to invest in this company? And okay, let's get to it. Here's the bear market we've been in. Occurs when market indexes track at least 20% lower from the most recent high and stays below for a period of time. They tend to recover. They always have. And it normally drives values higher, offering higher returns for those who endure them. Provide the most returns on the time in the market. They say you shouldn't cut your contributions to your retirement accounts during a bear market. And I know that's a little hard, but as I've been buying in this bottom region, this big gully as I call it, I've seen my cost per share come down, and each month I get more dividends because of these low prices, and they're still paying the same dividend amount as when things were good. Now, I have had some cuts, but I see where some people, they're down 25%. But since I've been buying at the bottom and being careful when and where I buy, I'm only down about 11-12% right now. And to come positive would require very little upward change, and I could be back to break even real quick. They say the average bear market lasts around 1.3 years. Some of them have been shorter, some have been longer. With a cumulative loss of 38%, again, that's an average. Some have been less, some have been more. And they say the average bull market, once again, less, more. There was one of the recent ones that allegedly lasted like 12 years. And 339% gain on average, less, more. It depends on the length of the bull market. Each crash is different, but they have similarities. And the duration of each crash is never the same. Bear markets generally are much shorter than bull markets. There have been short bull markets between bear markets, and there have been really long bull markets between short bear markets. It's a lot of moving parts in this thing. And let's take a short review here. There we go. The current market we're in, the peaks generally agreed upon as being January 3rd, 2022. It's considered the classic date that started the bear market, because after that things just went downhill and kept going downhill. On January 4th, the Dow Jones reached a peak of 36,799 and 65. The S&P was at 47.96. The NASDAQ was at 15,832. And the bear markets began where there was clearly a 20% or more drop from the high point from January 3rd. The Dow Jones, they claim, is March the 11th. It officially crossed into bear territory. The S&P officially crossed on June 13th in 2022. And the NASDAQ, I can't find an exact date, but several sources say it was sometime in April that it crossed into bear territory. And then will be considered a return to a bull market when there is a 20% or more increase from the low point of the bear market. So whatever the low point is since January 3rd of 2022, if there's no more low points, figure 20% up from that will be a declaration of the start of a bull market. I'm waiting for those numbers. I'm waiting for the 5%, 10%, 15% marks, because that's where I'm going to be doing my strategic buying, hoping that it's not just a false peak. We'll see. That's my strategy. I have to look at 100 other indicators to see what's going on. Okay, let's get to the good stuff. That's what we're all here for. I put together a chart from a bunch of different sources, and I show only the important stuff. What I'm showing is the stocks that are really worth looking at to see if it fits in with what your profile is or what you want to do. You can change data views using the sort function associated with each other, and I'll show you that once I bring them up. And it's broken down into payment groups. When I get this stuff, it's all raw data. And there's dividends being paid on a yearly basis, twice a year, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, sometimes 20, 26, 52. And they all just come in one big gulp for me. So they all got to be sorted out. And I color code the chart. When you see something in yellow, it's what I have a stake in. And when you see something in orange, as I'll show you, it's a stock I'm looking into. I like. Something green is something positive. Something red is neutral, or negative rather. Gray is something neutral, and these all can mean something either good or bad. It could be red, but it could be something good. I don't know. The column headers are, as you go down through scroll down through the tables, you'll see light blue and white. These are record separators. I just leave them in. Sort of helps me locate things too. Gives me a landmark. If you see something in, that should be light orange or light beige. I use either one of those colors. It's something worth looking at further into. It has potential. And light brown is something I'm considering for purchase. You'll understand a little better once I get this going. The light blue in the headers are columns that the user can change data in the cell. The gray colored columns have formulas, and you shouldn't mess with them. And the blue colored headers are raw data. You can change them, but they won't be restored when you close the file and reopen it. It'll be whatever you've put in. And when you see something, lowercase entries are data that I had to input. That's mostly in the stock column pile. So, all right, here's my hustle. Want the tables? Okay, $5. PayPal me at myselectstuff.com. Put in there that you are purchasing a product, the May 2023 table. It's only for your use. I'll send it within 24 hours. I'm doing this manually to a point where I better get a download service to take care of it. And I'm not going to sell your email address. If I do any offers, they will originate from my email address, which is big dividend 100 at outlook.com. No, gmail.com. One of those. You'll know when you buy it where it came from. It's coming from me. Okay, well, let's park this. We'll come back to this in a second. And let's look at the tables. Let me find the tables. There's the tables. Okay, let's drag it over onto the screen. Whee! Okay. Now, I'm going to shrink me down a little bit here. Okay. And this is for May 2023. And with my tables, I can give you an apples-to-apples comparison between two stocks. It doesn't matter, like this one's paying 3 times a year. This one's paying 13 times a year. You get an apples-to-apples comparison of which one is performing best. And that's through, there's a fancy calculation there. If you want to look at that, there's another one here that normalizes this stuff so that when you're looking at one apple in this hand and one apple in this hand, that, oh, there I am. You can say which apple can be better suited for you. This one is for May of 2023, as you can see. There's 1,219 entries. There could be stuff that didn't make this list. Take a look. Maybe you found a jewel that bears looking at. And send it to me. Either on my Facebook page or on my YouTube channel. And then I divide it into, these are ones that are paying once, twice, or 3 times a year, so you can just look at a smaller group. And when you see this divide by 0, that means some information is missing over here. Probably something I got to straighten up, because that doesn't look right. No, they paid 0 dividends. So they're just getting on the dividend wagon, all these zeros. Okay. I still have to figure out how to read my own charts sometime. And this is the quarterly one. That seems to be the most common one. It seems like 12 12 dividend a year, monthly payments is catching on bigger and bigger. Let's okay, I do have it sorted. Never mind. So this company called NRT is scoring at the top. And these rating columns here is ratings previous, rating current. It matches up with previous amount of dividend and current amount of dividend. So you can see there was a difference. They raised their dividend a nickel a share. And they're paying quarterly. But I look at anything on these rating columns here, these two rating columns, as anything above a 10 really gets my attention. And I'll look at stuff that are in the 10s and sometimes down into the 9s. But I'm looking for, consistency. I'll start researching them through my websites to see how long they've been paying a dividend. Is it a steady dividend? How do their financials look? How does the future look for whatever business they're in? And then group together ones that are paying dividends 5 to 11 a year. And here's everybody's favorite. That's where most of my action is, like all of it is 12 to 21 dividends a year. And as you can see, I'm into CRF. They've been a good performer, even though they cut their dividend the first of the year. CLM did the same thing. They cut at the beginning of the year. OXLC I just bought into a few months ago, and it's been a good performer. OPP, which there's a sister to it called RIV, it's been a steady performer. And this is the one I'm looking into. It's called RA, Brookfield Real Estate Association Incorporated. Go on YouTube. This is the easiest thing to do versus me trying to explain it. Type in Brookfield Real Estate Association or RA, and you'll get a dozen videos of people reviewing it that got the time to do the real in-depth legwork. And they cover in 15 minutes or less more than I could possibly cover. So anyway, continuing on down, and I got some stuff in RIV, and it's been a steady performer, but once again, like OPP up here, they cut their dividend at the first of the year, but it hurt a little bit, but not much. And then we come down here, and in 35th place, or 34th place actually, yep, I own some R yield and Q yield. And they have been steady performers. So contrary to what some of the other folks have said, that they've sort of bottomed out. They've had a little bit of gain over the last month. But month after month, that dividend is just steady. Between 17 and 20 cents a month, every month. Occasionally dropping a little bit below 17, but it's not costing me anything to hold it, and it's been up there as a decent winner month after month. Should you get into it? Well, look into it. It's not a fixed dividend. It depends on market activity, but for the last 6 to 8 months, it's been a decent performer, both of these. So I just hold on to them. And over here where it says quote current and this stock exchange symbol, these are generated from within Excel. There's a feature over here called data, and there's a place called stocks, convert to stocks. If you put a symbol in here like PCF, it'll kick this back. It'll say high income securities, exchange on the New York Stock Exchange, symbol PCF. And this is an extra column I add where you can use this function to get the current price. So you get my chart and you open it up, say, I don't know, the 15th of May. It's going to show you the current price. This is going to show you the quote from the last day of the previous month, April. And you can see if anything's changing. It's a feature I just added in this one. Now we're going to come down onto one here. This one, When I first got it, it was a nice rock steady performer. And there it is, USOI. Oil futures through Credit Suisse. They're a Swedish company, Switzerland. Back in fall of last year, they had a stock contraction. For every 20 shares you own, you now own one big share. This stuff was trading for about right around $5 a share. And it paid a decent dividend. It was paying on average around 20 to 22 cents a month. And it varied. Some months were a little weaker. Some months were stronger, but it was averaging around 20, 21, 22 cents a month. And as you can see here, last month it paid $2.84 per share. Made my dividend income for the month. It was a big winner. In April, it only paid 60 cents. So this was for March. In April, it only paid 60 cents. Now for May, they've already declared that they're paying $1.90 something per share. So a little bit less than there. But this one, so far this year, has been wild. A low of 60 cents, and 1 month it paid like $3.38. And I hold it because I bought it cheap, $5 a share. I had nearly 1,000 shares, and when it was kicking back, 20 cents a share a month, it was nice. Those months when it only kicked back, like 10 cents a share, okay, it was still nice, but not as nice. I've thought of getting rid of it, but maybe it's settling down, and we'll settle down around a $2.50 a share per month premium on average. They're currently saying $27 per share per year is what it should yield. We'll see. And there's my stakes. I'm really looking at this RA. It's been steady. It's 20 cents here, but it's actually 19.9 cents. And they have been paying that for a couple of years. It's one that I didn't know about. That's why it's in the lower case here. It's not coming through on my feeds. That this has been a good solid performer, and the last month it's shown a little bit of increase. And there's a question mark here because there's no current quote for it. So now one of the other little features I have in here is this dollar position. Everybody talks about, well, how much would I make if I had a $10,000 stake? Well, this is the column you can mess with. Now, if you had a $10,000 stake in CRF, your dividend capture per year would be right now about $2,038 and some odd cents. Everything's staying equal. They stay at 12 cents a year. But with compounding, as you get more dividends credited to your account every month, that number will actually rise a little bit. But that's a good baseline number to start from. And this tells you the number of shares you need in order to have that $10,000 position, so you're not scrapping for trying to do math. I do it for you. And everybody wants to know, well, how many shares do I have to own for $100 worth of income per month? That's another one I see often enough. You'd have to own 787 shares right now at the current price. And if that changes, well, figure you're going to have to own 800 shares probably. And that's how much you would have to spend to buy those 786 shares so you could have $100 a month. About $6,000. But that's a pretty decent return. $1,200 return a year on a $6,000 investment. try getting that in the bank. And that's how I look at it. I mean, $1,200 on a $6,000 investment. What is that? Let me figure that out real quick. That's a pretty decent rate of return. Because you get the dividend yield over here, and that comes from the raw feed. So that could let me do some quick math here. 50 thing. Yeah, that's a 20% return. So 18.85. Yeah, that's within the ballpark. Plus, you're going to be gaining shares. Those shares are going to start working for you. Between CRF and CLM, each month I gain 10 shares of each one of these just from my dividends. So start figuring that in. That 120 shares at the end of the month just because I let them use my money. And all those dividends start paying dividends on top of dividends on top of dividends. The snowball thing that Dave Ramsey talks about. Now there's a couple other ones here in the top 10 or 20. I hear a lot about ARR. I've looked at it and looked at it and looked at it. I don't know. I'm still looking at it. Same goes with ECC, CM. See, any of these that have a current rating larger than 10. Let's see how many there are. We get a whole bunch down here in the tens. Oh, 10 point. Okay, so there's 36 of them that pay monthly. Every one of them is worth looking at. You don't have to sort through something, like 8,000 stocks trying to find something. Well, like I've also said, there's gems out there that don't get caught in these feeds that I do manually. So, and here's a quarterly. And these are all decent. Any one of these is worth looking at that have a rating of 10 or higher. This one, now when they get ridiculously high, this is 190.52. This is back on the main page from this PC. Well, first of all, this is in Hong Kong dollars. I know this one because I've looked this up. So you'd have to correct this stuff. And I believe the 52 cents is, all this is in Hong Kong dollars. So when you go to look at one of these things, make sure they are talking US dollars. I know this one isn't. And I mean, they're offering a 28-cent dividend twice a year on a 52-cent per share stock. I don't know, maybe it's worth buying $100 worth of it and see if anything happens, or tracking it. It's I have fun looking at this stuff. And this next one here, it looks like it's a mutual. I'm not 100% sure from the stock. I haven't looked this one up, but it's a $101 stock. It's paying 3 times a year. Well, they've been paying $10. Now they're going to pay $22.75. It looks like it's some kind of special payout. Might be worth looking further at. I'm trying to narrow it down so that you got a better chance. You can, instead of sorting through 1,000 stocks, you can sort through 35 of them here. And if you only want to look at quarterly, boom, all the quarterly stock. Now, I'm going to shrink this down. Now on the front page of when I opened up, I had the bear market there, and I had RA, which is at Brookfield. Let me find it here for you so you know what you're looking for. Let me get it up here. Yeah, there's my page. Let me just pull it up on NASDAQ. Market activity. See all market. And then just type in RA. This is the one you want, Brookfield Real Assets Income Fund. And it'll come up. Let me shrink me down, get me out of the way. And I'll show you the recent market activity. But down here is dividend history. And good companies will have their dividend report here. If you don't see a dividend report, I don't know. But as you can see, currently trading for 17.17. Decent volume, 222,000 per day on average. And they pay monthly. And as you can see, they're paying 19.9 cents. And they've already are going to pay that through June of 2023. They paid it all through 2022, all through 2021, all through 2020, all through 2019, 2018, 2017. And they're still paying that rock solid. I am seriously considering getting a few hundred shares of this. Now, that's not a recommendation. Do your research. They have a decent balance sheet from what I've seen. They're one of those companies that's got a, as Warren Buffett says, they got a good moat around them. Look that up. They seem to be doing good, solid business. And this goes clean back to, well, the first one they paid was in December of 2016. And this has got my attention, and I'm looking at it. Now, we'll talk about this other one called ZIM. They're an integrated shipping services company. Now, they're based in Israel. Surprise. I had never heard of this thing till, I don't know, 6 weeks ago. And they've been paying an erratic dividend, but it's been a monster dividend. They're cargo containers that they ship throughout the world, and as you can see in this table here, they're paying what some call outrageous dividend. Here they paid $17 per share back in March of 2022, and they seem to be paying quarterly. They paid in March, May, August, and November, and they've picked up again here in April. So does that mean they're going to shift to June, September, and December? I can't see where they've forecast any future payments. They haven't done any declaration recently. And if you own this particular stock on April the 4th, which was a while ago, when the pay date came around, well, that don't make no sense. The payment date was on April the 3rd here. The effective date was April the 4th. That's got to be a typo. But they did pay $6.40. Now, are they going to do that on their next declaration? I don't know. I find it a little shaky. They've been making their money based on the pandemic, that when things were all screwed up, their shipping costs went up like 7-8x. Some of them even went up 10 times what they were pre-pandemic. And they had a lot of extra cash laying around that they paid out. Now, the one strategy I've heard, and I have to wonder about this, you tell me what you think, is buying this stuff when they declare a nice big dividend, like a week, 10 days before the effective date, and then holding it till after the pay date, and you get your dividend, and then you sell the whole lot. I find that a little risky because you don't know how far between the effective date and the payment date is, and you may lose out on what the stock is worth. You know, if this stock would suddenly drop to, and this is just an example, would suddenly drop, say, to $10, and they're only going to pay, you know, a $3 per share, you can wind up losing money. They call it the grab and go strategy. That doesn't fit my profile, but it certainly is fun to look at because in the right environment, it might be worth it. You know, grab a bunch of stock on margin before an effective date. Hold it through the record date. Hold it till after the pay date when you collect your dividend, and then sell it. Boy, if you can do that for a gain, that's an interesting strategy. Write to me about that one. Tell me how you've done. So let's get rid of this. Here's my busy desktop. I actually have two screens side by side here. So let's go back to this. I'm almost out of show here. And last slide for this show. Yippee! Where do I stand as of May 6, 2023? Well, my low point so far in 2023 was the beginning of the year, January 1. My portfolio was down 24.3%. It looked pretty glum. Where I am at right now, since I've been doing selective buying all year, that dollar cost averaging, I'm only down 11.86% on the total value of my portfolio. So I've sort of gained 12%, mostly from dividend income being rolled back in buying cheap shares. It's brought my dollar per cost way down, like my CLM. I'll talk about that one. That's my oldest child. I was originally buying it for $13 and $14 a share, and I thought I was getting a good deal. Right now it's trading for about half at around $7.50, $7.75. But since I've consistently bought it, it has actually brought my dollar cost averaging per share is like $7.94. So I'm a little bit in the red on it, but it starts coming up. It's trading for like $7.75 or something like that right now, and all I got to do is get to like $7.80 or 90 cents, and I'm out of the red on it. Hopefully it'll go back up and be a $13, $14, and the dividend will go back up. But it's definitely that one and CRF are two keepers for me. So anyway, my 12-month average for dividend income at the end of on this May 1st or April 30th, whichever one you want to use, I'm averaging $302 a month. The previous month, at the end of March, my average was $285, and that's what I'm looking for right now, is to see my dividend income go up month after month. I'm just holding this stuff. This money gets rolled back in. So I had a $17 gain there. And that's a couple of shares. Not of the USOI, which runs $76 a share, but it gets rolled back in and it starts working for me. So that's the end of the show. The main stuff. You may see a lot of clutter in the back. My wife's part of the office is right behind me. And we got stuff hanging all over the place. You can tell we're kitty lovers. I like dogs too. But for me and my wife, taking care of a puppy would be a little bit too much. We have two little kitties. One of these days they may hop up here. And You can see I got a blood pressure machine back here. Yes, I'm on meds. 1 or 2. A little bit of high blood pressure. And I have some other investments, mutual stuff. I don't do solely dividend investing. Although during this bear market, it's been one of the most successful ventures is the dividends. And I hope I've given you a gold nugget, something you can run with, and it's useful for you. And you know, write me on Facebook, put a post in there, or instant message me. Oh God. Let me know what you think. Hopefully in a few years this will turn into something good. Planting seeds right now, hoping that a good crop comes in. Hopefully I become a reputable talking head. And I'm having a lot of fun. Just be careful with your money. Do your research. If you got to take a loss, well, take it. And when you get the gains, take those. Don't ever be afraid to take a profit. Because sooner or later, something's going to go wrong again. So, have a great day. And I'll be back soon. And as always, subscribe, like, ring the bell. So the next video that comes out, it'll just show up in your feed. Thank you, and have a wonderful day. Bye-bye.